Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. The International Monetary Fund says the Philippine economy may likely experience some scarring given the depth and duration of the downturn caused by the pandemic. But the multilateral notes that macroeconomic policy support and reforms may help ease the pandemic scarring effect on the local economy. The IMF says accommodative monetary settings will be important to support recovery, while fiscal support remains critical. Now, once sustainable recovery is underway, fiscal priorities or fiscal policy priorities rather should shift from income to aggregate demand support, that's including a renewed infrastructure push in emerging areas such as digitalization, healthcare, and climate change. That's according to IMF Asia and Pacific Department Chief Thomas Helbling. Some of the important areas of scarring are prolonged subpar investment and employment woes, the IMF says. They earlier slashed their growth forecast for the Philippines to 3.2% from an initial outlook of 4.5%, or 5.4% rather, for 2021. Now, digital transformation is estimated to create up to 5 trillion pesos in annual economic value for the Philippines, according to a report commissioned by Google Philippines. Alpha Beta founder and managing director Fraser Thompson said, digital adoption is important for the Philippines to become more resilient, especially after the pandemic. However, Thompson said the Philippines is facing obstacles in achieving digital transformation, such as low digital adoption, the lack of awareness, gaps in access, digital skills gap, and complex regulations. As such, he said the Philippines should enhance digital skills training and education, accelerate digital adoption and innovation, and promote digital trade opportunities. Okay, guys, taking a step back and looking at record high over in the US, you can see that on my terminal here, the S&P 500 had actually gone close to near record, and a 10-year US yield is above 1.655% this morning. This as the third quarter earnings eased anxiety over imminent rate hikes that is spilling over into Asia. Let me just see what has happened to my Bloomberg terminal here. Seems to have gone missing for the time being. Apologies for that. Let's try and go back to not sharing this screen here. It is, however, in my Bloomberg Anywhere on my iPad here, so I'm going to be using that instead. Nevertheless, Bitcoin has reached a fresh peak that is scaling the peak it had reached in April. The first Bitcoin-linked exchange-traded fund listed in the U.S. was debuted as the second most heavily traded fund on record for the cryptocurrency industry. And here again, the story of oil being there, the crude oil holding the near to the highest level in 7 years amid, of course, that global energy response. And just on that story of oil, you've got now the Department of Energy wanting the oil deregulation law amended. They have urged Congress, at least yesterday, to amend this law, saying the country is now facing a prolonged oil price hike due to the high global demand and the tight supply. They're asking for Congress to provide a framework for the government to be intervening and address the sudden prolonged oil price spikes. What they're trying to ask for is for these oil operators to unbundle the cost of retail products so that they can determine what is the true cost and what is the cost passed on to consumers. This is being asked by Energy Secretary Alfonso Cusi in a letter that they sent to Senator Sherwin Gatchalian and Pampanga Rep Mikey Arroyo. Of course, pump prices have increased for the 8th straight week here in the Philippines. And on the back of that, you can actually see the peso firming up finally after it had a 2-day loss. This after Benjamin Diokno of the central bank did mention that they will keep on the accommodative stance despite, of course, that rising oil prices. Now, here to chat with us about the market movements, we have with us Tina Ulang of First Metro Investments. Good morning, Tina, and welcome to the broadcast.
Hi, good morning, Danny. Good morning. Nice to be here.
Good morning, Ma'am Tina. Now, unfortunately, my terminal isn't working this morning, but I do have it on my iPad here. And I just wanted to talk to you about the general markets here. Of course, COVID cases are the lowest that we've seen so far since July. But there is, of course, this oil story looming and inflation woes. But the BSP is saying they're not going to be, addressing the interest rate hike while the economy is still recovering. Tell us, how is this going to bode well for markets?
Mm-hmm. Well, this inflation scare is really brewing up and heating up now. The transport groups are asking for subsidy to temper the impact on their daily income, and it is becoming a concern because energy investments globally has really slowed, and it's only growing 9%. Much to the disappointment of so many in need, especially economies that are now reopening. And in terms of the impact on the market, I think this is going to favor some of the oil players like Petron and Shell, while it will redound to their benefit and share price upside. But the inflation is going to hit the margins of those that are in the non-oil sector, such as in the consumer discretionary, food service, and
Okay.
other things, no? But I think there is going to be some action on the part of government, LTFRB, DOTR, and the DOF are now trying to figure out ways to alleviate and temper the um, the impact of the higher oil prices, and one would be the unbundling of the pricing, no? But in
Mhm.
terms of that, that has been fought by the oil players because they want to keep their flexibility in as far as pricing is concerned, and that is really the cornerstone of the oil deregulation, giving them the freedom to do their own pricing, and that has ensured steady supply. The pricing mechanism working, I think it is something that is going to be in the hot spot. But I think the situation that we are in now also highlights the fact that the need for government resources to be mobilized and to help ease the impact of the inflation. Maybe in the form of subsidy, maybe in the form of suspending the excise taxes in a limited way. But we need legislation. So we are in a very difficult situation now. We need to compromise. Private sector and government maybe can come up with something on the discount, on the
Mm.
installment price increases, installment, and maybe getting some of it reimbursed by the government. So a lot of creativity now is needed and a lot of compromise.
Okay, ma'am, but are there certain sectors? I know it's not such a good question to be happy about the rise in oil prices. But are there certain sectors that might be benefiting here? We did see the energy players, rising even before today. You mentioned already, Petron. That's part, of course, of their strategy. But there are also the likes of the power players that are might be benefiting from this oil shortage. We also saw renewable energy players, for instance, enjoying a run up.
Mm, mhm. Also, mining companies is one example is Semirara benefiting from the skyrocketing prices of coal in China, buying a lot of it. And also, companies are benefiting from rising interest rates. If the yield curve steepens, then it's going to be good for banks because the spreads are going to improve. The spread on loans are going to improve, and the downtrend in the net interest margin is going to maybe it's time for it to trough, and therefore that's good for the core lending business. Maybe more encouragement for banks to go aggressive, more aggressive, as the past due rate may be covered. The weakness on the asset quality may be offset by the fact that your spreads are already wider this time and you have
Okay.
growing loan volume. So it's the banking sector also, and then the mining companies benefiting from it, and the banks.
Okay. So mining and banks actually benefiting from the increase in oil prices. Ma'am, let's talk about one specific stock that has been on the radar. AC Energy, of course, they have a Vietnam battery storage development facility there, and they're also going to be fully owning an Australia joint venture. It's the first one they will be fully owning outside of the Philippines, and they are getting rid of their thermal assets. How much further does this stock have to go? There's a lot of excitement, but also the actual output in terms of energy is not yet there. It's still all in the pipeline.
Mhm. Well, ASEN is really very proactive and one of the pioneers in terms of the RE push, renewable energy push, and they have been very widely present in almost all aspects of the RE space: solar, wind, offshore, battery storage. They have been very aggressive. And I think this is part of the new trend that we are seeing, decarbonization and the laying out of the regulatory environment in as far as making it more conducive to the renewable energy. So this is one local player that we are very proud of. And I think in terms of the ESG scoring, ASEN will reap much and more funds will be attracted to it. And so the upside cannot be underestimated.
Okay.
The 11 peso target price has been hit and more is yet to come because the company continues to invest in an area where the global players are also getting into. It's carbonization time for the global industry, and they are riding the wave of investments.
Ma'am, you mentioned the 11 peso target price. It's now 12 pesos and 16 centavos. It just
Yeah,
seems to be skyrocketing there. How do we reprice this with the assets, especially the Australian assets? Is this,
mhm.
how do you set a new target price for this ownership?
Mhm. Well, with the important thing to focus on is really the value of the offshore investments and the cash flows that it will generate. What is the internal rate of return that has been set for that? And for all renewable energies, there is a hurdle. And what is really the regulatory environment there? What would be the regulatory risks faced uh, by the outfit there factored in terms of the WAC. So these are really new and early days for these investments. And but of course, ASEN would know what is the kind of ROE, ROA that they're facing in terms of that investment. So it is really the capex ramp up that is critical to the valuation and the kind of cost of capital that they face.
Okay.
But
Ma'am,
I think 11 target price 12 is an underestimation of the full potential and the full because everything is dynamic, and so the to set a target price is really to underestimate the full potential of the company. 12 pesos would be an a price underpricing ASEN.
okay, so marami pang there's still room to run at ASEN up by 2.5% already this morning. Ma'am, I wanted to also get your feedback on the semiconductor sectors, just the chip makers, especially after an IHS market report saying that we might be benefiting from all of these, digitalization all over the world and a shortage. And we've seen that in our exports as well. We're improving 18% up year on year in August. But tell us, these prices that you see on my terminal here, Certec, IMI, SHA, they are significantly low compared to what they were before. They haven't rebounded, nevertheless. Is this a good time to be entering into these stocks?
Mhm. Uh, it may be time to accumulate some of it and see how the new innovation in terms of their product array and their service contracts are going to evolve. But this space of chip making and antenna making and all related to digitization is really the wave of the future. And this is something that you can bet on now, knowing that there is a shortage and that the shortage is going to be remedied by the fact that investments are pouring into the chip making and all related and allied industries. And this is at the fastest rate, 16%, 19% in terms of the global capex growth. And that should be able to alleviate the shortage and enable the industry to take advantage of the growing demand for gadgets that go into electric vehicles, that go into electronic equipments, which is very much in demand in this pandemic environment. So these are really our tech bets on top of the
Okay.
telcos, where investors can reposition, slowly accumulate on dips.
Okay, so telcos and then these ones are also part of your bets. Ma'am, what are your thoughts on the follow-on offerings as well as the IPOs coming on November? You've got Synergy, you've got Luciaco. These are suspended stocks that are, doing follow-on offerings. Is this going to be exciting for the market? How is that going to change the movement in the markets that we've seen, of course, enjoying quite a run-up since August?
Mhm. You know what we're seeing in the market is that the investors are hungry for new names And the PSE is very has laid out regulations very conducive to more listing of small companies, medium-sized companies, which is good for the capital markets. The pricing you notice is below 1 peso for all day, and which is reminiscent of the what we see with Merrimart. Merrimart has had a strong run, and it seems to remind investors that companies with very cheap valuation, like prices that the ordinary layman can afford, would seem to have some upside, and so this is creating some uh, a wave of excitement in the market. Also, wine companies have been successful, like Emperador, and it also
Mm.
is reminding us that maybe keepers would be on the same path, and would be giving investors good money on the table.
Okay, so affordable stocks here that retail investors can take at this moment, something to be watching out for, and as well as your picks, telcos, chip makers, and AC Energy, some room to run there. Thank you so much for those insights, Tina Ulang, First Metro Investments.
Thank you, Danny. Bye-bye.
Here are other headlines we're keeping our eyes on. The Philippine retirement income system is ranked the second lowest in Asia and is 41st out of 43 economies in Mercer CFA Institute's Global Pension Index 2021. This comes after the country's overall index value slipped to 42.7 from 43 last year. Now, out of the 11 Asian countries in the index, the Philippines was ahead only of Thailand, while Singapore, Hong Kong, and Malaysia have the top three retirement systems in Asia. Iceland, the Netherlands, and Denmark top the list of 43 economies globally. Mercer Wealth business leader in the Philippines, Harold Tan, said the country needs to reinforce and reinvigorate its voluntary direct compensation scheme, while the government must look at no cash out options to preserve savings and benefits for employees when they retire. Now, government infrastructure spending rose by more than 60% in August as Public Works is expected to account for the bulk of the state's expenditures for the rest of the year. Infrastructure spending jumped to almost 71 billion pesos. That's from just about 44 billion pesos a year ago. That's as state agencies hasten the delivery of connectivity and transportation projects. The Budget Department expects the government's infrastructure program to propel the state spending for the remainder of 2021. And that's a first look into the business day. Today is Wednesday, October 20, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are one you.